Hello and welcome to this educational presentation of two things you can immediately start to do to improve your candlestick trading. Now, I would venture to say that the majority of all traders now use candlesticks in some capacity in their trading, whether they actually use it to generate signals or setups or just a way to visualize the charts. It's my opinion that most traders are having a very difficult time with trading with the candlesticks because they're using them improperly, and I can share with you today two things that will, in my opinion, really improve your candlestick trading. First of all, let's define candlestick patterns because this is part of the problem. Candlestick patterns are reversal patterns, usually occurring at the top or bottom of a trend. Now, this is traditional wisdom. This is a traditional definition of candle patterns, all candle patterns. Let's just look at one of the most popular. And as we can see here, this is a downtrend, obviously. Now, if we're looking for one of the most popular and probably the most common reversal patterns, it would be right here because you see support and you're looking for some type of bottom, a reversal, and you see two bullish engulfing patterns. This is a very common and very practical way to trade with candlesticks because once again, they are reversal patterns. So you're looking for a reverse in this downtrend. So right here, the market, according to these candlestick setups, would be telling you that these are signals to go long based on that support and the bullish engulfing patterns. And then this happens, okay? Look familiar to anyone. Now that happens on the downside. It can also happen while we're going higher. We're in an uptrend, so we're basically seeing a really nice sharp spike. Let's say that you track some overbought, oversold tools, a stochastic oscillator, and this has just gone up way too quickly. It's time for a little pullback. You're interested in buying Apple in this older example, but you want it to come back a little bit, so you're looking to sell. You want to catch a little extra money on the downside. And what do you have here? Well, the indicators are overbought, and at the same time, you have a bearish engulfing pattern. Two very strong indications that price are going to go down according to traditional wisdom. So you decide to sell and then this happens, okay? So there's actually something wrong here. We have to find ways in which we can improve our candlestick trading because we're doing something wrong. Overall, you may have every once in a while a nice setup where this works, but really overall, there really is no consistency in trading candlesticks this way. Well, today I'm going to share with you these two things you can start doing immediately to increase your odds for consistency. And you're going to see how simple it is to apply these two simple steps on our new PTS Primo charting platform. I designed this with Pro Trader Strategies, and we strongly believe it is the platform that teaches traders how to trade with the markets. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And 9 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. And someone would say, well, why do you want to educate traders? Why don't you just give them signals to buy or sell? Well, you see, that's the way the entire industry is based on. I just attended the Traders Expo in Las Vegas, and walking around the convention floor, I saw that the majority of all the booths and all the different vendors were designed to basically take you out of the game. In other words, the process was you just simply click on a button and a buy or sell signal is taken there and you have no idea why it's generated. You just blindly take it because after all, they should know what they're doing. Well, this is why education is sorely missed because education will allow you to make your own decisions. So this is what we do at Specialist Trading and Pro Trader Strategies. We fill in that gap. Because once you know what you're doing, once you really are using things that have high levels of consistency, well, then you'll have the confidence to make your own trading decisions as opposed to what the majority of all traders do, which is rely on someone in a chat room, rely on some master trading guru on TV they listen to, rely on somebody who's supposed to know what they're talking about or some, blog that has all the answers. This is the way 99.9% of traders trade, and this is why the majority of traders fail. Now, I've been trading for 41 years now. I started on the floor of the Pacific Stock Exchange, on the floor for 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist doesn't mean you're more special than anyone else, just means that you specialized in making markets in roughly about 50 or 60 stocks. So I made markets during the crash of 1987 and the bull market that followed. So in my 41 years, I've traded just about every market you can think of, every market environment, every system, every method, every technique. So I know what works in terms of consistency and I know what doesn't. So why waste your time and mostly your hard-earned money spending thousands and thousands and thousands of dollars on things that really don't work? where we can educate you so you can ultimately stop having to spend all that time and money and just go forward with your trading. Now today I'm going to share with you 2 things that you can immediately start to do. It doesn't cost you anything. You can start using them right away. But before we begin, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples I'm about to share with you are strictly for educational purposes only. So once again, this is required by law, so as you're taking a brief moment to view it, I would also like to take this time to invite you. If you haven't done so already, we have lots of people coming daily to our Twitter page, but if you haven't done so already, feel free to follow us on Twitter. There's our handle right there. If you'd like to copy that down, it's abbreviation for Specialist Trading. I post different things on a daily basis, anywhere from little bits of wisdom that I've accumulated along the way, financial wisdom, to techniques and educational snapshots of things we have on our platform. Today I posted a really nice snapshot of a tool we have on our platform in NVDA. So there's lots of great free information, so feel free to follow us on Twitter. Okay, with that said, once again, our goal is different from other companies you may have attended other webinars. We don't promise to have the perfect system that's going to have you retiring in 6 months. We don't promise to have some method that all you have to do is click a button and it'll automatically tell you what to do. Sure, we automatically generate buy and sell signals, but our first goal is to teach you why those signals are being generated. So we have the buy and sell signals on our platform, but as a way to check your work, to know that you're in line with the strategy. So once again, my goal is not to force feed you signals. My goal is not to trade for you. A good mentor teaches you how to trade, but he does not trade for you. So that's what my goal is, to teach you the same things that were taught to me some 41 years ago. And I believe these are the same things that have sustained my trading for over 4 decades. And hopefully they'll be able to do the same for you. So I'm going to be teaching you these 2 things in class today. But since this is a classroom, I want you to ask me any question if you happen to be confused or something doesn't make sense, but please wait till the end of the class to ask questions. If we stop, like so many other presenters do at each slide, we'll be here far too long. I don't want to take up your entire trading day. So wait till the class is over, probably about another half hour or 40 minutes, and then I'll reserve the last 10 or 15 minutes for any questions, okay? The only question I will answer is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, we will send you a link to this recording. So we have a good crowd here today. If you joined us late, please wait till the end to ask questions. All right, with that stated, let's begin today's class. All right, improvement number 1. Let's get right to it. What are the 2 things to start improving? Well, remember, we talked about the definition of all candlestick patterns, meaning that they are reversal patterns. Well, guess what? Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. So this goes against everything you've ever been taught. You know, we're taught that if there's a nice trend going straight up, we're looking for a reversal pattern in candlesticks and vice versa. But that doesn't work. I just showed you those examples where there really is no consistency. Trying to pick tops and bottoms with candlesticks is a recipe for disaster. You will actually have a better or a higher level of consistency if you see a candlestick pattern that is in sync with whatever trend you're trading. So as we look at this downtrend right here, remember, conventional wisdom tells us candlesticks are reversal patterns. So we're looking for buying opportunities, right? Well, the same thing with an uptrend. We're looking for selling opportunities, but that's not the way it works. What we want to do is be in sync with the trend. You never want to swim upstream. You want to swim with the current at your back. It's the same thing with an uptrend and a downtrend. If the trend is down, you're a seller. You're looking for selling opportunities as represented by any candlestick pattern. If the trend is up, as you see here, you're a buyer. You're not looking to sell short or pick a top or pick a reversal. You're looking to go with the trend. You want to swim with the current at your back. This is the great lie we've all been taught about candlesticks or about trading in general, that's where you make the big money. Now, every once in a while, you will catch a big one, just as every once in a while, you will hit a home run out of the park. But those are not the things you should be searching for. These are the things that should come just every once in a while. What you should be trying to gain are consistent little profits along the way. You can only do that by trading in sync with the trend. Now, some of the trending tools that are used out there that you can start using today, they're very generic, are indicators. You know, many times a lot of traders like to look at moving averages to find out what the trend is, or patterns. A lot of traders will say, well, higher highs and higher lows generate an uptrend. Lower lows and lower highs generate a downtrend. Okay, that's fine. And time frames. Many traders will look to see what the higher time frame is, and they want to make sure that the lower time frame is in sync. Well, those are all well and good trending tools. They're all very basic, very generic. You can probably find them in any software package, and probably every educator uses them in their trading methods, and they're fine. But they only have a certain level of consistency, and usually they're a day late and a dollar short. We want to use a trending tool that will really let us know in advance what the trend is before anyone can figure it out. Is there something like that out there? Well, let's look at this chart right here in Aetna. As you can see, this is the way most traders trade. By the time they see that it's an uptrend and they decide to get in, well, they usually get in around here, and then this is what happens. So what you want to do is be able to figure out you're in an uptrend down here and be able to figure out that the trend has changed well in advance before it bottoms out. Well, what we need is an early trend detector. This brings us to improvement number 2. How can we know in advance, most of the time, not guaranteed, but most of the time, when a trend is underway? Well, we apply the PET D. This is the second most important thing we're going to use with our candlestick trading. As we see here, the PET D, when applied on our platform, all you have to do is click on the PET D tab, changes the colors automatically. Green bars represent an uptrend. Red bars represent a downtrend. It's as simple as that. There's nothing you need to do because this is a proprietary tool, in-house tool. It's a formula that needs to be calculated on a tick-by-tick basis. Well, don't worry. You don't need to do that. We've taken the hard work out of it for you, and we automatically do that by making it into a color bar tool. So how can we combine these two things together? As we see here, when we're in a downtrend, look how the PET D automatically didn't tell us we were in a downtrend down here, but it told us well in advance by having consecutive red bars that we were in a downtrend. And in an uptrend, we don't find out late by this time that we're in an uptrend. We found out well in advance back here that we were in an uptrend. Okay? So now we know the trend. We know that we want to apply the PET D, and we want to be trading candlesticks in sync with the trend. So trading engulfing patterns in sync with the PET D is, in my opinion, one of the simplest and most, I would say, consistent ways of trading candlesticks. Let me show you what I mean here. If we're looking at bullish engulfing patterns, now this can be virtually applied with any candlestick pattern, but let's just take the simplest and easiest one that we can find here. Bullish engulfing patterns. We're only going to buy if the engulfing bar, which is bar number 2 in the 2-bar pattern, is colored green. That's how simple it is to be in sync with a trend when you use the PET D. So here's a bullish engulfing pattern. It's a 2-bar pattern. Bar 1 is usually down from open to close. Bar 2's open to close range is usually up. Okay, this is what people are usually looking for at the bottom of a trend. Well, remember, that's a recipe for disaster. We know that that doesn't work. So what we want to do is apply the PET D. And as long as bar number 2 right here is outlined green by the PET D, that's all we're concerned with. All right? So let me show you how simple it is. Right here, someone would say in this older chart of wind that there's absolutely no trend. They say, Steve, how can I be in sync with the trend if I've been just going sideways for the last 2 or 3 weeks? All right? Nothing is telling me there's a trend here. We're in a range, and I should just stay out of a range, right? Well, we have a bullish engulfing pattern here. All right? We're not at the bottom of a trend. We're not at the top. We're just kind of going sideways. Let me show you how powerful the PET D is, because once we apply the PET D, even though it may look as if there's no trend or we're in a range market, the PET D has had all of the bars virtually colored green. So it's been telling us well in advance that you are in an uptrend. Now, we have a bullish engulfing pattern here. All we're concerned is that the engulfing bar, or bar number 2, is colored green. As we see here, it is. That's all we need. Now, sure, it's great that the majority of the previous bars were green, but it does not matter. Even if all the bars were red, it would make no difference. All that matters is that bar number 2 is green. So where it looked as if we were going sideways in a range, we actually have a high probability setup to go long. And the stock gained 12 points in the next week. See how simple that is? Didn't have to look at news. You didn't have to pay thousands of dollars for some guru in a chat room to tell you what to do. You did it yourself by listening to the market. How about bearish engulfing patterns? Well, bearish engulfing patterns, traditional wisdom says that we're looking to sell at the top of a trend, but we know there's no consistency in that. We're only going to sell if the engulfing bar, which is bar number 2, is colored red by the pet D. Once again, can't get any simpler than that. So we have a 2-bar pattern. In this case, bar number 1 is usually up, open to close range, and bar number 2's open to close range is down. All we're looking for is for bar number 2 to be colored red by the pet D, as we see here. If the pet D colors it red, that's a high probability setup that we're most likely going lower. So, as we can see here, traditional wisdom would tell us, well, we're in a downtrend. Let's look for some reversal patterns. Remember, there's some bullish engulfing patterns right here, so we should be buying, right? No, not necessarily. Remember, this was a buy signal right here using conventional wisdom. And then, if we look with the pet D applied, the engulfing bar is red. Remember, in order for us to use this as a buy, that bar needs to be outlined green. So there's no signal taking there. You would not have taken it, and guess what? You would have bypassed this entire losing setup. What we're looking for is a bearish engulfing pattern, as we have right here. And bar number 2 is colored red. Don't you think you would have done a lot better in that instance? And if you missed that, well, guess what? There was another one right here you could have taken to the downside. So do you see how you're putting the odds in your favor, how you are increasing your chances for consistency if you swim with the tide at your back instead of swimming against or upstream, the way 99.9% of us have always been taught? Trust me, for someone who's been trading for over 4 decades, there is no consistency in swimming against the tide and swimming upstream. It just won't work. You'll tire yourself out, and you won't see the gains you've been promised. Now, when we combine these two techniques of trading against what we've been taught, of trading in sync with the trend, and then using the pet D as our tool for determining the trend, we create what we call our candlestick combo. This is one of our most consistent trading packages to date. And I'm going to show you how simple it is as well to apply it by using our new PTS Primo charting platform. It makes trading simple. Everything is one click away, but remember, it's not a black box. We teach you in our online courses first what you're doing, then you apply the platform to make sure that you understand and to verify your setups. Let me show you what I mean here. Let's look at some recent examples using our candlestick combo on the platform. Okay, here's an example in letter B, okay? Someone, once again, looking at this would say, Steve, how can you get any idea of what this is doing? First of all, we're only looking at about a week's worth of data. And then secondly, that data is just going sideways. There's no way you can get any idea what this is doing. That's the way we've always been taught, right? That's not true. Because what do we have here? We have a bullish engulfing bar, all right? Now, normally we would say, well, yeah, but that has to be at the bottom of a downtrend. No, it has to be in sync with the trend. But once again, if you just decide to use, a conventional way of discerning the trend, it would most likely tell you there is no trend. It would say we're just going sideways. This is why the pet D is so powerful, because once you add it, all you have to do is click on the pet D and it automatically appears. It changes the colors. And even though the last 6 bars have been going sideways, what color are they? They're all outlined green. So the market, not some guy in a chat room, not some trading guru, or not some earnings estimate, but the market is telling you we are in an uptrend. And that's all you need to listen to. You need to block out all those other things that really show no consistency. So you have a bullish engulfing pattern that's just been confirmed by the pet D. So this is telling you, most likely, this is going to go higher. How high? We don't know. This is not a confirmation tool. It's simply a tool, telling us a high probability setup that most likely we're going to go higher until the market decides to change its mind and says, I want to go lower. So as we can see, the market did go higher, all right? Now we have exit signals and we have places and different levels in which to exit in our courses. So you could take your pick. You could either get out with a 50-cent or a point profit or try to hold on longer. Either way, you would have had some nice potential for capturing a profit here. Until this happens, we have a bearish engulfing pattern now. And what color is bar number 2? Bar number 2 is red. So what is the market? not some earnings estimate, not some volume or some institutional report. What is the market telling you? It's telling you most likely it wants to go lower, that it's changing its mind now. It wants to change the trend. So if you're still long, it would be prudent to most likely sell or move your stop up and think about going short. And that would have been a good idea, because look what happened. Did we have any idea how far, how down, how low this was going to go? No. All we knew is that the market was telling us it was changing direction. Trading is really simple. It's just ourselves as traders who make it more complicated than it has to be. Let's look at letter AN. Okay, now we would normally look for a buying opportunity here, and that's okay. But remember, we're not going to base it off of traditional wisdom. We're going to base it off of what the pet D is telling us. So right off the bat, we have a bullish engulfing pattern. We also have a morning star, okay, another candlestick pattern. So these are bullish patterns, but we don't care about just blindly taking them. We have to confirm them with the pet D. So we click on the pet D, changes the colors, and all the previous bars were red. And this bar, bar number 2 in the pattern, or if you're looking at all 3 bars in the 3-bar pattern of the morning star, is colored red. So what is the market? Not traditional candlestick wisdom, but what is the market telling us? It's telling us it's not going to go higher. Most likely, not guaranteed, but most likely it's going to go lower. And look what happened. So do you think the pet D could have helped you stay out of that trade? Here's another example in PEP, Pepsi. All right, we have a bullish engulfing pattern. We apply the pet D, it's confirmed. And so we have a little profit out of that. But look what happens up here. We have a bearish engulfing pattern. And bar number 2 is colored red. So we should exit that trade if we decide to. Remember, it's up to you. You're in charge. I'm not some trading guru in a chat room telling you what to do. The market tells us what to do. We can take suggestions from it or advice from it, or we can decide not to, but it's your choice. Remember, you're in charge of your trading. So if you decided and listened to market, you would have most likely exited, and that would have been a great idea, because look what happened to Pepsi. Now, if you missed that trade, not to worry. There was another sell signal generated about a week or 2 later, and it was verified by the pet D. Here's an example in PSA, all right? Once again, just looking at 5 bars of data. Someone would say, how can we use this? Well, traditional wisdom says we should buy this. It's a bullish engulfing pattern. This is the way we've always been taught. The market's been going lower, a bullish engulfing pattern, so most likely we're going to reverse and go higher. Nope. What we're teaching you today is listen to the market. What does the market tell you? And someone would say, well, Steve, I don't know how to listen to the market. I've never been taught. Well, guess what? The pet D translates what the market wants to do. The pet D is really a translator. It translates on a tick-by-tick basis what the market wants to do, whatever market, whatever time frame, whatever direction. So let's apply the pet D, click on it, and now the market is telling you that that has not confirmed because the bar is still outlined red. So you don't want to take that trade. And pretty good idea not to take it, right? Don't you think you would have liked to listen to the market in this instance instead of maybe some guy in a chat room or some institutional report? And once again, if you missed that, don't worry, because here was a chance to get out and to go short, another chance to get out and go short, and another chance to get out and go short, all along the way. Let's look at GRMN, okay, Grumman. Uptrend. What do we have here? A bearish engulfing pattern. So this is telling us we should sell according to traditional wisdom. But we don't listen to that anymore. We only listen to the market. So how do we listen to the market? We apply the pet D, all right? Now the market went higher. So obviously this didn't work. If you had applied the pet D, you would have known not to sell it because bar number 2 was outlined and filled in green. So that's telling you from the market that it wants to go higher. So why would you sell? Okay? And look at all the bullish engulfing patterns you could have taken advantage of instead of selling. You see how it's much more conducive to being a consistent trader if you swim with the current at your back. So the current was going up. The market was saying, I want to go higher. So just look for buy setups, which in this case would have been bullish engulfing patterns. Now we get to a certain point where we start to change. Okay, now if you haven't taken profits, if you're still in, well, the market's giving you a chance to get out. Because what do we have here? A bearish engulfing pattern. Bar number 2 is red. And you should have taken warning because look what happened after that. Okay? The market is always telling you what it wants to do. Here's the only trouble as traders. we've never been taught to listen to the market. We're always taught to listen to some convoluted indicator that is slow and is lagging based on volume or based off overbought, oversold tools. Or we're always taught to listen to the institutions. After all, they have the big money. They should know what they're doing, right? Or we're always taught to listen to volume or to listen to some guy in a chat room. Trust me, I listened to those things when I first started 41 years ago, and they didn't help me at all. So most likely they're not going to start working now. Here's another example. Costco. Looks like we're going sideways, but we have a bullish engulfing pattern here. So conventional wisdom says, well, that's a positive sign, right? Well, we don't know yet. Let's add the pet D. And yes, it is a positive sign. So we can take that trade. So let's go long. And look what happens. It doesn't work out. Most likely you would have been stopped out on this trade. This is why we wanted to show you this on purpose, because we're not going to sit here and guarantee that this works 100% of the time. Nothing works 100% of the time. You will have losses from time to time. What you want, rather than a system or a technique that hits home runs and makes you a millionaire, you don't want that, because that can easily lose just as much and take all your money. What you want is something that's consistent, that even though it will have losses at times, we'll be able to make it back. So we had a loss right here, all right? We got stopped out. Most traders love to go, lick their wounds and complain and play the victim and pout and say, this stuff doesn't work, I wasted my money. And while they're doing that, they're missing a chance to make their losses back. For example, had you gone and pouted and taken the next day off, well, you would have missed this engulfing pattern to the downside, or a bearish engulfing pattern. So you would have missed an opportunity to make the money back. Don't just sit and pout and lick your wounds. Get back in the game, because guess what? The market fell out of bed. 2 days later, you not only would have made your money back, you would have made a lot more. So this is what we mean by when we say our methods are consistent. Sure, we will have losses from time to time, but many times, not guaranteed, but many times they're able to recoup those losses rather quickly. How about KLAC? We have a bullish engulfing pattern here. We've been kind of headed lower, sideways to lower. Let's see if the pet D said we should take that. Nope, the pet D colored bar number 2 red. It's an up day, but the outline is red. So that's telling us no, the pet D still wants to go lower. The translator is telling us that the market wants to go lower. So do not take this trade. And what do we have here? The very next bar is a bearish engulfing pattern, and bar number 2 is red. So now the pet D is telling us that it's still negative, and you have a setup, some structure that will allow you to get in and go with me. All right, so let's go with the market, and you have a nice little profit there to the downside. See how the pet D can at times keep you out of some bad setups and keep you into the good ones. It's a great filter at times. Another example in FAST, F-A-S-T, all right, we're kind of going sideways to lower. So we're looking for a buy reversal, all right, if we use conventional wisdom. So we would bypass these sell setups here because, conventional wisdom tells us you only look for those at the bottom of a downtrend. But remember, we're not using that. There's no consistency in that. We're going to rely on what the market tells us. That's the source of everything we're trading, so why not listen to that, okay? So we have 3 bearish engulfing patterns here. Let's apply the pet D, and each and every one of them has colored bar number 2 red. So don't you think the market is not only suggesting, it's screaming that it wants to go lower, all right? Trouble is, we do the opposite. We say, well, this is major Fibonacci support, or this is where the institutions are buying right here, Steve. How can I go against them? Or Elliott Wave says that this is major support, and this is the bottom of a wave 4. We should be going up to a wave 5. You see, they're all based on things that show no consistency and are just too subjective. Why not just listen to the source? Why not just listen to what we're trading? And it's telling us it wants to go lower. And don't you think you could have done well taking any one of these bearish engulfing patterns? PZZA, okay? Now this is in an uptrend. Now let's see what the pet D would have told us. Well, we have a bearish engulfing pattern here. So that's telling us we should sell short, and nothing really much happens here. But we have 2 bullish engulfings after that. So which one should we take? The bearish engulfing pattern, after all, we went up very high here, or the bullish engulfing, and we're kind of just going sideways. This is how the pet D can help you make the decision, because remember, the pet D confirms which direction the market is going many times. So once we add that, we see that the bearish engulfing pattern is colored green. Remember, a bearish engulfing pattern needs to have bar number 2 colored red. So we're not going to take that setup. We'll take these two, and I believe there were buyout rumors a day or so after that. Did we know anything about the buyout rumors? Did we have any idea that, I believe this is Papa John's, was going to be rumored to be bought out? Absolutely not. Someone would say, well, then how did you know to buy it? The pet D was coloring the bars green, telling us, the source, the market we're trading, was telling us it wants to go higher. That's all you need to know. You do not need to overcomplicate your trading. Here's another example, letter R. The trend is down, so we have a bullish engulfing pattern. So this fits the traditional wisdom, right? We got to go long, right? No. We have to confirm it first with the pet D. So let's add the pet D. What is the outline of bar number 2? It's red. So the market, not some guy on TV, the market is telling us it wants to go lower. So the odds are against us, not guaranteed, but against us that's going to go higher. So we're not going to take that. Not a bad choice, right? What we should have been doing is looking for sell setups, like right here. You see how you add consistency when you swim with the current at your back instead of trying to swim upstream. Every once in a while, you'll get a really nice trade and you'll convince yourself that you're doing well, and then most likely you'll give it all back on the next couple of trades. Here's another example. We have a bearish engulfing pattern in HAS, okay? We apply the pet D and it is confirmed. Not a bad setup, right? Now we can also apply this to index trading. I know a lot of you like to trade ETFs. You'd like to trade options. Remember, you do not have to buy or sell the stock. You can buy options with this as well. It's up to you how you want to. But here's an example in IWM coming into October. The market was heading sideways to lower. There was a lot of indecision. No one knew what was going to be happening coming in the beginning of October. They thought maybe this is just a pullback before we go to make higher highs. And there's a bullish engulfing pattern. Everything you've been taught means that you should go long here, right? Well, we all remember what happened at the beginning of October. Is there any way these two improvements could have helped us? Sure. You apply the pet D, and what is the outline of this color of the bar number 2? It's red. So that's telling you this is not a valid buy setup according to the pet D. The pet D is telling you it wants to go lower well before this happened. Now, the IWM is the ETF that represents the Russell 2000 index. That's the 2,000 prominent stocks in the Dow and the NASDAQ. Don't you think this could have helped you, given you a warning that the market wanted to go lower? Now, guess what? Even if you didn't take that, or even if you did take that, you should have taken this one, because this was a bearish engulfing pattern well in advance of that downswing. And guess what? There was another one. And still another one. So you think the market was trying to give you warnings about what it wanted to do? If you missed those, it still gave you one more right there. Here's an example in the QQQs. Here's a weekly chart of the QQQs. Now we see on a weekly basis from May coming into October, we were going up very nicely. And the pet D was coloring all the bars green until we got to the first week in October. Well before we've started this sell-off that's been going on for nearly a month now, the weekly chart of the QQQ, that's the ETF that represents the NASDAQ 100, was giving us a bearish engulfing pattern. Even though we had these nice bullish patterns here, guess what? We had a bearish engulfing pattern right here, which changed everything. The first week of October, on a weekly basis, you knew to get out of the market, and you would have known that we're going to be going lower. Well before this has happened. This is an up-to-date chart coming into this week. Do you think the pet D could have helped you? I think so. Most people are sitting there. I met people at the Traders Expo saying, boy, who knew this market was going to go down? This just came out of nowhere. Well, if you had the pet D and you were looking at our candlestick combo, you would have had some really nice setups prior to this large sell-off. Now, a lot of people say, well, Steve, what about news? Does news get in the way of this? Because, if news events happen, that discards everything, right? Well, sometimes, but not necessarily. You're right. Many times you may be on the wrong side of a news event, but it's been my experience by using these techniques for going over 3 or 4 decades now that oftentimes the market will tell you in advance of a news event. For example, we see here in September, Yahoo Finance reported that Amazon is now a $1 trillion company. Okay, it just became the second member of the $1 trillion club. Remember, Apple was the first stock to go to the $1 trillion value, and now Amazon was. Okay, so most people, when they see an announcement like this, will say to themselves, gosh, the market has been going straight up. How did I miss this? Well, I'm not going to miss the second 1,000 or 2 points of this. I'm going to jump in and buy it because that's got to be good news, right? Well, as you see here, this is Amazon on a weekly basis, and this is where the news came out. So this is where most people will jump in, all right? If you had applied our candlestick combo, you would have seen that there was a candlestick buy setup right here. And if you applied the PET D, you would have seen that it was confirmed. So a good, I would say, 2 months before that news came out, the candlestick combo was generating a buy signal in Amazon, well before it was announced that it was going to be a $1 trillion company. All right, so let's recap before we go into questions and answers. Remember, you should only buy or sell candlestick patterns. We just focused on the bullish and bearish engulfing patterns, but virtually any candlestick pattern. You should only buy or sell candlestick patterns that are in sync with the PET D. Now, sure, you can apply this in sync with the trend. You can use a moving average or overbought, oversold tool or patterns, but trust me, they'll only do so much. They are not as good, in my opinion, and they're just, not as detailed as the PET D. Remember, the PET D is more than just a directional tool, more than just a short-term trending tool. It's a translator. It's telling you on a tick-by-tick basis what the market wants to do. And in my 41 years of trading, I have never found anything better than the PET D to tell me what the short-term trend is. So ask yourself, before you ask me questions, ask yourself, do you think this method could have helped your trading this past year? There's only about a month left in 2018. There's still time to turn things around and get back on track and to start 2019 in the right direction. Points to remember. This is not a complete strategy. All I shared with you today were high probability points for entry. But I didn't go into detail about your actual entry. We didn't talk about advanced entry signals. Should you just enter at the market, place a limit, wait for something else to happen? We didn't talk about stop placement either. I shared with you how there were a couple of trades that were losses. All right, where would you have placed your stop? All right, we offer different stop placement levels in our courses. And where would you exit? We didn't talk about exits either. Now, sure, you're in charge of your entry, your stop, and your exit, but where are the best ones in our opinion? Well, we offer those in our courses as well. And then finally, money management. How many shares, how many contracts would you be trading, okay? We offer all this information, but only in the complete course studies. Because why? Because this was not a complete strategy. This was just a technique showing you these high probability entry points, how they're happening virtually all the time by using candlesticks and the PET D. But we have to refine them a little. We have to have points of entry, points of exit, points of stop placement, and money management. Well, here's what we're going to do for you today. We're going to offer you a great discount, close to a 60% discount on our candlestick combo. You're going to get instant access to the course, detailed instruction, all the entries, all the exits, and all the stops so you can decide which ones you want to use. You're going to get the entire course rules along with 4 PET D trading techniques. These are entirely separate from what I just explained to you today. And this also includes strategy coaching. Now, let me break this down. If you just bought strategy number 5, it would cost you close to $700, okay? That's the going price for candlestick strategy number 5. And if you just bought the PET D on its own, well, it would cost you close to $3,000. So total for these two things would be close to $3,700. Don't worry, you're not going to pay $3,700 for this great offer to get your trading back on track. In fact, we're going to discount this nearly 60%. We're going to offer you a one-time fee of $14.95 and then just simple $97 per month payments, okay? That's nearly 60% discount, but this for a limited time only. Now, if you want to purchase it all together, well, it's a one-time fee of $29.95. This is a great, great offer, a nearly 60% discount on one of our most popular courses. That's the Candlestick Combo. But we're not going to just stop there. We have more bonuses. In fact, we're going to throw in 6 months of our PTS Primo charting platform. This usually runs close to $900. So that would take it up to roughly about $4,600, $4,700. We're not going to charge you anything. We're going to throw in 6 months entirely free. Now, you're not going to just get the platform and then the combination, the candlestick combo. You also get all these other perks with the platform. You're going to get proprietary buy-sell line. This tells you the overall trend of the market, whatever market you're looking at. A top-bottom 25% price bar feature that also can determine the short-term trend. Over 90 of the most prominent technical indicators. Free Bloomberg TV, so if you do need to look at fundamental news or information as it's being announced, well, guess what? Right next to your chart, you can click on a small window that will show you all of the Bloomberg information that's happening live in real time. And then lastly, personalized tech support that can help you with any issue you may be experiencing. But we're not stopping there. We're going to throw in as a bonus our scanner. So let's say you're not able to be in front of your chart all day. Well, you come home at night and you simply use our scanner to find out what the best candlestick combo setups are for the next day. You go into strategy number 5. It's this simple. Click on scan and this page will appear with whatever market you're interested in. Okay, let's say you like to look at E-mini futures. You can scan for those. Let's say you like to look at the NASDAQ 100 or the S&P 500, or let's say you like to look at Bitcoin or commodities or currency pairs. You can scan for any of those markets because we provide you with the lists. You can even create your own basket of lists to scan for. And strategy number 5 and the PET D can be applied to any one of those markets because they work in any market, in any time frame, in any direction. For example, had you scanned just last week, a couple of weeks ago, you would have seen that there was a strategy number 5 sell signal in Facebook. Okay? Now, that's a high probability setup. This was on the 2nd. This was just a couple of weeks ago. Let's say you're just not confident enough to take that trade. Maybe you want to buy puts. Maybe you actually want to short the stock. Maybe you're just not sure. How can we increase your odds for consistency? Well, we apply the PET D. Once we apply the PET D, the colors automatically change. Bar number 2, the setup bar, is colored red. This is giving you the verification that the PET D is saying that it wants to go lower. Remember, not me. I'm not verifying this. I'm not some trading guru. I'm taking the same signals. I know this. I've educated myself and know the same reasons why. The PET D is listening to the market, and it's saying that it's in a short-term downtrend. So it's confirming a strategy number 5 sell signal on the close of November 2nd. And do you think that could have helped you? Because the next week it went down 10 points. Okay? This is how easy it is. You could have done this just the last couple of weeks in Facebook. It also can scan other markets. So let's say you say, well, Steve, I don't really trade stocks. I like to look at, let's say, currency pairs. All right. Here's the Canadian dollar. You could have scanned and seen that, well, after you applied the PET D, there were buy signals generated here and here. 350 pips off of the scan. All right. How about a 4-hour scan? You can scan intraday as well. Here was a sell signal, a 4-hour sell signal using our candlestick combination in the dollar yen. 100 pips in the next 2 or 3 hours. If you trade the E-mini futures, here's a 10-minute chart of the E-mini. You apply the PET D, you scan for strategy number 5 setups, and there was a sell setup. It was confirmed by the PET D. 20 points in the next couple of hours. That's $1,000 potentially you could have captured per contract, and you could have scanned for that. How about this 1-hour chart of the E-mini? All right. Obviously, in hindsight, it's been going higher. But if you applied the PET D with strategy number 5, look at all these setups you could have taken advantage of. So it makes no difference which direction, which time frame, or which market. The candlestick combo can be applied to all, and you can scan for all using our platform. Trust me, a year from today, you will have wished you became a member of this course, not only because of the nearly 60% discount and the one-time payment with $97 monthly fees, but because for the first time, you'll feel like you're being consistent with your trading. You're not having a great month and then giving it all back a week later. And then starting out the year, getting so confident and having all these hopes and dreams about what you want to do by the end of the year and being so depressed by the end of 2018, saying to yourself, there's no way I'm ever going to reach these goals that I had for myself. Why not start out the year in the right direction? Take advantage of this great offer. That's our attendee discount of a one-time fee of $14.95 along with $97 per month. That includes 6 months of our new PTS Primo charting platform absolutely free. Now, if you want to take care of it all and just say, I don't want monthly payments, I don't want a one-time fee, well, it would only cost you $29.95 for everything included, as you can see here. Here's how to take advantage of this great offer. Contact Pro Trader Strategies. You can either email them, Call them directly if you have more questions about the platform or about which markets you can scan for or about possibly some other payment plans. They would be more than happy to work with you and work for you to get your great payment plan set up. You can call them directly at area code 310-598-6677. Now that link you see at the very bottom will take you to that discount sign up. There's more information as well. If you look in the chat box on the far right, that's where a live link has been posted. You can simply click that on. It will automatically open up a page for you to get more information. But you have to take advantage of this because the next week, I believe, is Thanksgiving. We probably won't be having a webinar, and you'll miss this entirely because when we come back, we'll be talking about an entirely different offer. This is a great, great offer to take advantage of. Trust me, before it goes back up to $37,000, $4,000, you'd love to take advantage of something that's discounted nearly 60%, okay? I'm going to leave this information up here. I promised I would answer any question now. So copy down the information. Feel free. There's no obligation to call Pro Trader Strategies. They'll be happy to answer any question, no obligation. And I'm going to leave this information up here while I open up the question and answer box and answer the questions. Gordon says, Steve, I came in late. How much does the PTS Primo charting cost? Well, you know, if you're asking how much it costs individually, just the charting package without the candlestick combo, that'd be a better question for Pro Trader Strategies because, you know, they have different discounts. If you want to get the platform separately, and it depends, you know, which markets you trade, what time frames, and they can work together and put a deal for you. Okay, so that's entirely different. Alan asks, what is the general basis for the PET D to color a bar red or green? All right. In other words, is it based off volume, momentum, range, or other? Well, Alan, we're keeping the formula in-house. Remember, it's when I first discovered the PET D, my mentor shared it with me. And this was on the floor of the stock exchange about 41 years ago. And we called it the formula because we had to calculate on a tick-by-tick basis this information. And it was, you know, it wasn't that difficult of a calculation. It was just very cumbersome. I mean, how would you like to, on every, 1 minute bar, have to calculate something? It's just too much information. You wouldn't be able to watch the markets. That's what we had to do. So I had my assistant doing that on a minute-by-minute basis, calculating the PET D. Well, we've refined that with the help of high-speed computers and programmers so that we've taken all that work out of it for you. We've colored it into a color bar algorithm, and so we are keeping the rules in-house, and we're just basically taking the work out of it for you. The only thing I can tell you is that it's based off of momentum. The PET D is not based off of a moving average. It's I know so many people think it's based off of moving averages and crossovers and overbought, oversold setups. It's not, okay? And even if someone were able to figure out what the PET D was based off of, it wouldn't matter. I can almost guarantee you that you would still lose money because the secret of the PET D is not in the calculation. The secret of the PET D is knowing how to use it correctly. I can't tell you how many students that have first started using the PET D, they don't study the course material. They don't go into, how it's refined and how to apply it correctly. And they think it's a buy or sell setup simply by the colors. And a week or so after they purchase it, they want to throw their computer through the window because they say, Steve, this doesn't work. I bought this, incorrectly. It's not working for me. And then I'll say, well, tell me, how are you using it? Share with me the examples. And almost inevitably, they're using it entirely out of sync and incorrectly by the way I teach it because they didn't study the course materials. So that's the beauty of the PET D. You're getting someone who has been using this for nearly 40 years. So I know how to use it correctly and how not to use it correctly. That's what the cost is of the PET D. Someone, a mentor who can work with you, who can help you in the right direction. There are literally dozens of ways to use the PET D. And there are dozens of ways that are the incorrect way to use the PET D. Unfortunately, most traders are looking to find out what the secret is, and then they apply it incorrectly. And that's why they lose money. So the secret to the PET D is being taught how to use it. That's the beauty of this, and that's what you get. Someone who's been using it for 40 years who can be your personal mentor, okay? All I can tell you, since we're keeping it in-house, is that it's based off of momentum. Okay, good questions, though. Thank you. Other people are saying, let's see, does this go off volume? No, we don't use this off volume or off ranges as well. What if you want to use your own platform? Well, if you want to use your own platform, you can apply the PET D and strategy number 5 to most of the major platforms such as TradeStation, Metastock, MT4, NinjaTrader, Sierra Charts. I'm sure there are a couple of other more. Even Thinkorswim, we have a way to use their data to apply it onto NinjaTrader charts, where we do all that for you free and set it up for you. So there are a number of ways you can use that, but trust me, it is so much more simpler on our platform because everything is a click away. There's nothing you have to upload. There's nothing you have to go into a box to find out where the pet D is and how to apply it. It's right there automatically, one click away. So really, consistency is one click away, all right? That's why I would suggest taking this offer because we're throwing in 6 months of the PTS Primo charting platform entirely free. On top of that, you have that scanner. So it's in literally less than a minute, you can scan for most of the major markets and find out where the setups are for the next day. That's the beauty of this offer, okay? So as we close here, I really hope you saw how much attention to detail we give and how much we really want to educate you. Remember, that's our goal. We are an educational company. So once you are supplied with this education, you will start to see almost, just out of the blue, you'll start to see consistency. And that's all we're trying to instill in your trading. We're not promising you that you're going to retire next year. We're not promising you that you're going to go on that dream vacation. But for the first time, we always get testimonials that students get back to us saying that for the first time in years, I have consistently done well. This is all we're trying to instill. We can't guarantee it, but we have the education and the mentoring along to get you in track with that. So hopefully you'll be able to turn your trading around. If you've been struggling, I know how depressing it can be. I was there 41 years ago. I know how disappointing it can be, all your hard work, and you don't have anything to show for it. Come on board with this great offer, and I'll be there with you every step of the way to teach you how to use the candlestick combo, okay? In closing, I hope you got something out of today's presentation. I want to thank you so much for attending, and most importantly, I look forward to all of you becoming students of mine in the Candlestick Combo course along with the PTS Primo Charting platform. Thank you so much. Have a great Thanksgiving. I'll see you next time. Bye-bye.